Joining us is Bank of America Securities Head of U.S. Economics, Aditya Bhave. On set with me is Andres Garcia Amaya. He's the CEO at Zoe Financial. Aditya, your boss front ran you a little bit this morning. He was making this point that you guys, there's no more rate cuts this year. Elaborate.
Yeah, so this inflation report really confirmed our concerns about underlying inflation. We've been of the view that the core PCE is basically stuck on trend between 2.5% and 3%. We thought that the last 3 months of data, which were annualizing more around 2.2%, 2.3%, were a bit of a head fake. And now, obviously, we feel better around that view. And then if you look at where we are on inflation, which is stuck above target, and where we are on the labor market, where the unemployment rate was within a whisker of having a 3 handle on it, we don't see any reason for the Fed to be cutting any further.
No reason for the Fed to be cutting any further. I mean, we talked to Barry Knapp yesterday, Aditya, who could make the case for 4 rate cuts based on kind of broader signs that inflation is cooling. And some people say, look, we've had hot January CPI prints year after year after year. Maybe we can just look past this.
But I think that's a very important point to make. For sure, seasonal factors are inflating the January CPI data, but then to the same degree, they are lowering inflation over the rest of the year. So that gets you back to the point that you don't want to take solace from the remaining 11 months if you're going to look through January. And I think the simplest solution is to just focus on the year-over-year rate, which, again, looks like it's getting stuck.
So what should the Fed do?
The Fed should stay on hold. There's going to be a lot of political challenges if they really do want to hike, and we think that's some ways away. But the best way to avoid hiking is to not cut rates.
Is there anything they can do on the balance sheet? Can Treasury fix this somehow? Can Doge fix this, Aditya?
I think that's pretty second order. There's certainly scope for Doge to cut government spending, and if they're successful in that, that would help. But would it help a lot on the inflation front? Probably not.
All right, Andres, bail us out here. What happens then? What happens to the market? What happens to housing? What happens to everything?
I think the market is stuck right now because it can't attach itself to one narrative, right? And you see that in the market dynamics where you have low volatility, low correlation, but high dispersion, meaning stocks are moving, but they're moving all in different direction.
I'm glad you said that because it's kind of how it feels. Like it's been tough to even form the narrative. Tech has been weaker than usual. Other areas have been stronger. Massive moves on earnings. Yeah,
so I think this morning's CPI number definitely gives the narrative of, oh no, inflation is going up. The Fed won't be able to lower interest rates. That's bad for stocks. But then earnings are killing it, right? Fourth quarter earnings up 12%. They're not done. Like 75% of stocks have reported. But the expectation was 7.
12% is really strong.
Yes. So it's one of those of which narrative is going to win out. And right now, when you look at the structure of the market, no one has won out yet. But we are close from all-time highs, so it feels much worse than it actually is.
Just yesterday, we were talking about how resilient stocks have been in the face of tariffs and all the rest of it. So do you think the CPI print spoils the party?
I don't think one print will spoil the party, and I think you need to take into consideration the broader story, which is GDP has held up, unemployment rates at 4%. Even if the Fed, God forbid, they have to hike 25 basis points, this is not the same hiking cycle of going from 0 to 5.5. This would be maybe 25, maybe 50. Sure, there'll be a short-term freak out, but I think the market could hold off if earnings continue to deliver and the economy continues to deliver.